We are slowly working our way into earnings season. Lots to await. The tech companies are preparing their reports for the latest results. Let's get more on this now from Theresa Shutt, Chief Investment Officer at Harbourfront Wealth Management. Theresa, thanks as always for joining us.
Pleasure to be here. Good morning.
What will we be looking for the earnings season this quarter?
Yeah, absolutely. I mean, this week will feature plenty of corporate and macroeconomic news for investors to focus on. More than 90 S&P 500 companies are reporting quarterly earnings this week. And generally, the earnings season has been strong so far. 75% of S&P 500 companies have beat expectations. And I feel like on the AI front, it appears that most of the negatives have been priced in. So I think obviously we've got, the four big this week. We've got, Wednesday's Tesla, Microsoft, Meta, and then followed by Apple on Thursday. But I think what's interesting is the Mag 7 has really started to fracture since their underperformance began 4 months ago. And so I feel like these companies are sort of on their own trajectory. And they're trading obviously at low levels relative to their highs, which says to me the bears are really maybe more focused on the negative news and maybe less so the structural long-term fundamentals. And we've seen more flows going into the Russell 2000, Russell 3000. I think is more of a defensive play against the large cap sector. So I think there's a lot of things that people are looking at in terms of adoption, monetization. Obviously we've had some big announcement this week with CoreWeave, CGI, and so I think everyone's following those pretty closely. But I think the earnings season, as we know, it coincides with the increased focus on Fed messaging. So any indication that rates could stay elevated for longer, that could amplify any negative earnings surprises in tech. So I think we'll have to wait and see what they come out with. But I think there's obviously the bulls are there, but I feel like there's maybe a bit more of a bearish or kind of pragmatic approach to these tech stocks now.
Is it healthier really, of almost a rebalancing and people kind of moving their money in more realistic directions rather than throwing it all into that one pot?
Yeah, absolutely. And I think what you're seeing is, some people call it the sell America trade, but, we're seeing more flows into emerging markets, which I think is really interesting. Asian tech companies are getting a lift. So I think it's important, for an investor to look outside of the U.S. market. And I think we've seen some strong earnings from, industrials, consumers. And I think that's, something that's good for the market. So this kind of broadening of market leadership is really important. And again, we're not maybe talking about the Mag 7, maybe we're talking about the terrific twos. We're going to see winners and losers. That concentration is still there. It makes me nervous. So I think it's time to look outside of the AI sector. And obviously we're seeing, commodities and gold. Silver's rise has been basically parabolic. So there's other places to put your money. And I think we're starting to see that now.
Okay, and you mentioned about the Fed tomorrow likely standing pat, but what will we be looking for and what they say?
Yeah, absolutely. I think 97% of the market, there's consensus that he's going to stay pat. So people will be really looking for the messaging, what he says. I feel he's probably going to stress data dependency, which I think is really important. We've obviously got economic data coming out. We'll have to see how inflation, economic growth trajectories unfold. But I think also, I feel like he's going to be very tight-lipped about any definitive plans. He'll want to preserve maximum flexibility for both the committee and his successor. So I don't think he wants to walk, his successor into sort of any particular path. So I feel like it's going to be, I'm not going to say vague, but I don't think we're going to get a real sense of whether we're going to get these 2 to 3 interest rate cuts for the rest of the year. It's yet to be seen.
And how do you see the markets reacting to that? We've heard a lot that they've had it baked in already, that it's going to stand pat. Do we see that as the reaction?
Yeah, I think pretty much. I think, again, more of the focus will be on the earnings. But the observers will watch very closely for the tone and the stance that he takes, particularly with respect to the labor market and inflation. And I think too, I mean, the backdrop of this is heightened geopolitical tensions. Obviously, what we've seen with tariffs and Trump's announcements around 100% on Canada, 25% on South Korea. I mean, it's obviously creating noise, but also interesting is the market appears to be turning more of a deaf ear to these kind of proclamations. And I think that's interesting of itself. Is it, complacency, or is it simply taco? So I think these are definitely interesting times.
All right, and then throw in all this. The dollar is been struggling against the pound. It's the weakest since 2022. I think Canadian dollar. I haven't looked at the last a little bit for the Canadian dollar, Japanese yen as well. What kind of a factor do you see all that playing?
Yeah, absolutely. So, yeah, the U.S. dollar, I mean, we've seen, kind of that pressure that's weighted down, and that's due to kind of a lot of factors. Obviously, geopolitical tension and tariffs, if there's inflation and whatnot. I think, again, the noise around Sell America is starting to build, and this idea of reallocating, portfolios away from the U.S. So I think, the dollar slumping, gold is, hit 5,100 an ounce. Apparently, you can now buy a bar of gold at Costco, which I thought was very interesting. So, if that's really viewed as the safe haven asset, clearly that leads to more U.S. dollar weakening. So I think, this is, kind of what Trump was looking for. It does obviously increase competitiveness, particularly in the export market. So I don't see, the U.S. coming back anytime soon, as long as, this kind of trend remains in place.
Okay, we'll have to wrap it up there. But Theresa, thank you as always for joining us.
Pleasure to be here. Thanks, Roger.
Theresa Shutt, Chief Investment Officer at Harbourfront Wealth Management.